I'm Taylor Riggs in San Francisco, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, Uber sinks. Shares are falling to a record low for the ride-hailing company as the lockup period expires. Is the worst over? We have analyst insight. Plus, a rocky picture for Roku. Shares are falling as much as 17% in after-hours trading on Wednesday after the video streaming platform posts third-quarter earnings that miss estimates. We also have details ahead. And Huawei, the U.S. government says Russia, China, and Iran will seek to meddle in the U.S. elections going forward. How vulnerable are we? We get opinions from two ethical hackers in our electioneering series. But first, to our top story, it is all about Uber, and shares are hitting a record low as the post-IPO selling restrictions for early investors are lifted. The sell-off has placed Uber among the most actively traded stocks in the U.S. on Wednesday, and shares in this year's largest U.S. IPO are now down nearly 40% since its May debut. For more, Lightshed partner Walter Piecyk joins us in New York, and with me in San Francisco, it is Bloomberg Technology's Lizette Chapman, who covers the company. So, Lizette, give me the breakdown. What did we learn today about the lockup?
Exactly what we had expected, that there was 1.7 billion shares outstanding. A large swath of them have traded hands, like you said. It's the most widely traded stock today. And that a lot of people are just sick of waiting around for it to get better. And so we saw the stock fall. And again, there are some questions around whether this could continue, considering that a number of the very early investors are not yet are not underwater, and they could see potential upside.
Walter, the volatility today, is this a day's issue, a week's issue, or a months-long issue?
I mean, the average daily volume is 15 million shares, as Lizette was saying. You're talking about 1 billion shares that are coming off of lockup. So, I mean, some of those shares are probably not going to trade. I don't think SoftBank, who owns about 200 million or so of the shares, is planning on selling anytime soon. They're pretty bullish on rideshare and have a number of investments. But there's some, the founders of the company, we'll see what they're planning on doing. There's some early venture investors in there as well. There's a host of other of investors. So it could take more than just a couple of days, I think, to digest through this.
Lizette, I want to take a look at a chart that I'm showing for our Bloomberg audience inside my terminal, and it is the bearish sentiment around this stock that we've seen recently. There's 1.4 puts for every call, which shows more bearish sentiment as we were heading into this. Put that bearish sentiment into perspective for us. We knew that this day was going to come. Do we expect more downside risk ahead? What are investors saying?
Investors are also taking their cue from the results of Uber, who reported on Monday. And at that time, it was mixed, it was noisy, and the upshot were a couple of things. One of them was that the growth was the slowest at 29% a quarter than has ever been reported since the company began sharing that number. That's not a good thing, because this is a company that has always sold investors on its growth potential as it went to 60 plus countries and entered things outside of its core ride hailing into grocery delivery, autonomous driving, helicopters, gig worker matching, etc. So that's one thing. And whether it's going to continue or not, anyone's guess. I know that a lot of people focused on the fact that it projected it would be EBITDA profitable by Q4 2021. That's a number that's a projection that has never been shared before, and I was supposedly to reassure investors, but it doesn't seem like it worked.
Walter, give me your take here. Does the bearish sentiment line up with the fundamentals that we got from the company this week?
I mean, part of it, like the sell-off in these types of stocks, is not just happening the last couple of days or weeks. It's been going on for months now, right? Whether you call it growth, momentum, unicorn type stocks, there's just been a disfavor, and there's no positive catalyst on the horizon for this company to turn that. I mean, the eats business and the incremental competition that they're feeling, which resulted in a deceleration of growth, which is an incremental negative, that doesn't seem like it's going to stop anytime soon. And I think that catalyst of saying, hey, we're going to reach profitability in 2021 was probably wasted ahead of what was $1 billion, or excuse me, 1 billion shares coming off of lockup. It's still questionable whether they can actually hit that target. So in the meantime, you've got a competitive eats business. You don't have autonomy coming as a potential catalyst, I think, anytime soon. So it's just hard for investors to own these types of names when you're relying on things like revenue multiples to base your valuation.
Walter, I have a little bit of a bone to pick when we talk about adjusted EBITDA, meaning the company's profitable. And to be clear, right, we're not talking about net income or an absolute bottom line profitability. Are you okay with adjusted EBITDA being positive by 2021, or would you like to see that translate down into net income?
I mean, I'm fine with it. I'm sure most investors that invest in these types of names are going to be fine with it. I know it makes for better headlines to focus on a net income number, but the reality is that EBITDA represents the cash, or more closely associates with the cash generation of the company. You also have to look if it's a capital intense business, which this business is not. So if they can get to that positive EBITDA, you're going to find a broader group of investors that are willing to invest in this name and put multiples on EBITDA rather than relying on a multiple of revenue or bookings.
Bloomberg Technologies' Lizette Chapman, thank you for joining, and Walter Piecyk of Lightshed, you will be sticking with us. And now I want to go over to Roku. Shares are plunging as much as 17% after the video streaming company posted third quarter earnings that did miss analyst estimates. We will explore demand with increased streaming competition from the likes of Disney and Apple. We will be looking at that throughout the hour. And also on the earnings front, I want to take a look at Qualcomm because shares rose after hours on Wednesday. That is after the chip maker reported fourth quarter adjusted earnings per share that did beat estimates. It also said that fiscal first quarter revenue will be $4.4 billion to $5.2 billion. And Qualcomm also projected strong revenue with 5G technology. It debuts later this year with Samsung handsets. There's also some Wall Street optimism over a renewed relationship with Apple for future versions of the iPhone and 5G. And coming up, we will get the latest from Asia, where SoftBank revealed a $6.5 billion loss from its investments in Uber and WeWork. That conversation is next. This is Bloomberg. California's Attorney General has filed a lawsuit against Facebook in a San Francisco state court. The claim says that Facebook failed to comply with the state Attorney General's demands for information about the company's business practices around user data. California AG Xavier Becerra says his office was left with no choice when Facebook failed to engage. Japanese billionaire Masayoshi Son is defiant, even as his SoftBank group reported an enormous loss. Son's investments in WeWork and Uber led to a $6.5 billion operating loss. But he has made it clear that he won't back off his strategy, even saying that he can make WeWork profitable. Still with us, it is Walter Piecyk of Lightshed Partners. Walter, give me your thoughts on SoftBank here. A one-off, bound to happen, or something a little bit more serious where you're worried about the foundation here?
I mean, based on Moss's math, he's still up on the Vision Fund. I mean, they've booked up to this point over $15 billion of unrealized gains. So this was a big setback. The write-down in the Vision Fund in aggregate was $9 billion. So it was more than just what was happening at WeWork. It was also Uber, and there's a couple of other billion of write-downs that occurred. But overall, according to his numbers, he's still up on the Vision Fund. And he looks at this and says, look, we'll have 15 massive winners. We'll have 15 awful losers, which I guess WeWork will probably be within that group. And then we'll have all the rest that are kind of doing so-so. And so his investment style, as he discussed today, is more about having these massive winners, like he had with Alibaba, putting in 20 million. It's worth, whatever, how many billions now, 100 billion now. in order to drive the returns there. So I think Masa, while they're talking about a more conservative investment style, is sticking to what he really wants to do, which is find really big winners to drive the returns for the company. Look, the bigger issue for that company, with, this is kind of a sideshow, is they've got a big deal that's out there right now that's getting challenged by state AGs. T-Mobile is trying to buy Sprint. Sprint's a cash-burning company with a ton of debt that SoftBank is the majority owner of. The court is still, they have to go to court. If they lose that, they're kind of stuck with Sprint, which would be bad. So if that deal can get approved, if T-Mobile can buy Sprint and get that off of his back, he removes all that debt from his balance sheet. He's got a great asset in T-Mobile that he can then borrow against and invest in the Vision Fund, and I think it gets SoftBank back on track. So a lot of what SoftBank investors should be looking at right now is how that Sprint court case is going to go with the state AGs, because that could be a big catalyst for the stock.
Well, and Walter, you're rightfully so. I mean, second sentence of your note that's hot off the press says that Sprint T-Mobile deal is the biggest catalyst for the stock this year. Is that what you need to see to sort of not save the company, that sounds too drastic, but to really get that stock to move to the next leg higher?
I mean, SoftBank has a lot of things going for it in terms of investments. So there's other things that can help. 2/3 of the investments in their portfolio, they were the last guy that invested in it. So if through an IPO or maybe another round of investing in the private markets, you can get some third-party validation for some of these investments, I think that would also help SoftBank. Maybe if Uber, we talked about that in the last segment, if Uber can stabilize the Eats business and find some way to growth, bring back some of those growth investors, that would also provide more credibility. Right now, they're losing a couple of $2 billion on the Uber investment. So any validation of his investments, or the valuations, any validation of the valuations that he has set on his investments, or a favorable turnout in terms of T-Mobile being able to buy Sprint, either of those things, I think could be a very positive catalyst for a stock that really is still trading at probably a discount. No matter how conservative you are in terms of marking their investment style, probably still trading at a discount to the value of those assets. Let's not forget that Alibaba is still a massive investment that SoftBank has, and really, I think, supports the overall valuation of this company.
Walter, your general thoughts on SoftBank and the Vision Fund's sort of decision to put more money at WeWork. Some people have called it putting more money at other bad money. Your take?
I mean, Masa was insistent today that it was not a bailout to save a bad investment, but it certainly looks that way. I mean, you took a company that was valued at $47 billion and you put new money in at less than $8 billion. So to me, that sounded like a company that was pretty desperate. I don't think it's a good sign in terms of the investments. And look, it was SoftBank making the investment as opposed to the Vision Fund. So that also tells you that their Vision Fund partners, which they're hoping to sign up to the second Vision Fund, weren't willing to come in as the investor to effectively bail out WeWork. They were already in a portion of it. They were effectively willing to let that investment kind of go. This money came from SoftBank. The question then is, let's say Sprint faces the same issues. Let's say the T-Mobile Sprint deal fails. Is SoftBank going to come into Sprint and have to write another $10 billion check to help Sprint out? I mean, Sprint's a company that's burning money that needs to invest in their network. Should we expect more of this? That's a slippery slope for a company that you don't want putting more money into bad companies. You want them to put that money into new growth companies that can be among those 10 or 15 names that he thinks can be huge winners 5 years from now.
And do you expect them to do that with Sprint?
I mean, I don't think that they will. I think in this case, it's different than WeWork. The Sprint is an ongoing cash burn issue. I think they'll look for other buyers. Maybe they'll start to break up some assets. I mean, this is part of the reason that the government should probably approve this deal in the first place. Yes, SoftBank had the money to invest in Sprint, but they didn't. So if this deal doesn't get approved, you're going to be left with a company that its own parent is unlikely, I think, to continue to invest in growth. So they will regionalize their businesses. They'll start to turn off cell sites outside of metro markets. They'll look to sell spectrum, which will potentially impact the speeds of their service. It won't be good for the American consumer. And again, I just don't think that SoftBank is going to be in a position to put more money into that company if this deal fails.
Walter Piecyk of Lightshed Partners, you will have to come back for more. Thank you for joining us. Now, Huawei founder and CEO Ren Zhengfei says he expects global smartphone shipments to rise to about 240 to 250 million units in 2019. That's roughly from 206 million units last year. Now, speaking on a panel with Bloomberg, Stephen Ingle at the Huawei's Coffee with Ren event in Shenzhen, when talked about the impact of Washington's blacklisting on their company and wanting to meet U.S. President Trump.
Well, I don't have a channel of communication with Trump. I don't have his mobile phone number. Maybe you can be the medium.
Would you meet him and talk to him?
Yes, I would, certainly.
Donald Trump, if you're on live go right now on Bloomberg.
Well, he has private jets and he can come to China anytime. And I do not have private jets, and my airplane is only made of paper if it rains in my fall.
Coming up, the Ripple CEO says that only 1% of today's cryptocurrencies will survive, and they will be game-changing. That is next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Let's take a look at today's top tech calls. Jefferies analyst Brent Thill said Microsoft should be able to maintain that double-digit revenue growth for the foreseeable future. He said Microsoft's innovation should sustain strong business momentum in the face of any macro concerns. He maintained his buy rating with a $160 price target. And Groupon was cut to an underweight at JP Morgan after the company reported weaker than expected third quarter results. The JP Morgan analyst said it will be very difficult to offset the significant external issue challenging its core business, highlighting international macroeconomic pressures. And the street is weighing in on Xerox's bid for HP. Wells Fargo says HP may be worth $25 a share in a Xerox deal. Evercore said a potential Xerox purchase of HP would make sense given its potential synergies. And Deutsche Bank analysts said a cash and stock offer for HP would likely be heavier on cash. And those were a look at your top tech calls. And while Facebook's Libra is under immense scrutiny, Brad Garlinghouse, he's the CEO of blockchain company Ripple, is confident in his outlook on cryptocurrencies. Ripple offers payments and settlement services through its token XRP. XRP is currently the world's third biggest digital asset after Bitcoin and Ethereum. Garlinghouse spoke with Bloomberg's Hasland Amin and Rashad Salamat. Take a listen.
I'm incredibly pleased to see how much traction people are seeing with let's solve a real problem with digital assets. You know, historically, I think there's been a lot of hype in the crypto ecosystem, a lot of experiments, and we're able to look at what we're doing with XRP and really accelerate the adoption and help banks take advantage of what is possible through these digital assets.
So many cryptocurrencies are out there. You're one of the front runners, but the thing is, are there too many of you guys?
You know, actually, I agree with you. I think there are too many. There are around 3,000 different digital assets that trade on a daily basis now. I think, you know, anytime there's a new market, there's a lot of people that run into that market and try to show that they can solve a problem, they can deliver a customer need. I have said publicly before that I think 99% of all crypto probably goes to zero. But there is that 1% where I think that is focused on solving a real problem for real customers and is able to do that at scale. And that's going to be game changing. And I think that's going to continue to grow significantly in the decades ahead.
I mean, they're probably one of the reasons why there is so much instability in terms of the price here. But, you know, you want to be you are a currency, you want to be a unit of transfer here. But the problem is if you transferred some money to somebody else, that may be worth much less by the time they want to actually cash it in, if they do cash it in. So, you know, how do you actually produce some stability in all this?
it turns out this is a false narrative. It turns out when you enable a SWIFT transaction, volatility is a calculation of both time and volatility. So a SWIFT transaction can take 2 to 3 days, where an XRP transaction takes a few seconds. And it turns out the volatility of enabling a SWIFT transaction is much higher than enabling an XRP transaction because of the time. We actually just did a post on the Ripple website explaining the math behind this, but it turns out that the volatility risk is lower with an XRP transaction.
Investors are pretty concerned about the sell-off we're seeing in Ripple, and they say that it is bigger than expected. Is there reason to be worried about it?
Well, I think probably the sell-off in XRP versus the sell-off in Ripple is a private company. We have our shareholders. It's you can't trade Ripple shares, so to speak. XRP, look, we pay attention over the long haul. I tell the employees I don't think about it on a 3 days or 3 weeks or 3 months. Taking advantage of what digital assets can do to make transactions more efficient, I think, is a journey we'll be on for a decade or two. I describe it as a marathon, and we're on kind of mile 2. So I don't think about the price of XRP in the short term. I think if we can enable XRP to be the most efficient, measured by speed of a transaction, the cost of a transaction, more and more people will use it. So nothing to be worried about. Nothing to be worried about when you take a look at this sell-off. I think there's going to continue to be volatility in crypto broadly, right? The whole market kind of moves together a little bit, and there's times when XRP has outperformed Bitcoin, there's times it's underperformed Bitcoin, but I think as you look at this as a long-term journey, I'm quite optimistic about where we see the whole market. There's a lot of bullish trends for the whole crypto ecosystem.
Brad, then of course, other people and some of the big players want to get a slice of the action, and I'm talking about Libra. Now tell me about your concerns about Libra and some of the things which Libra does represent which are good.
Well, I think what's good is a number of people, obviously, in the crypto space, and certainly what Ripple has embraced, is this idea of how do we reduce friction? How do we reduce cost? How do we bring people who are unbanked or underbanked into the financial system? And so that's a vision we certainly embrace. And Facebook's effort to kind of go direct to consumer, I think, is one approach. The challenge is, I think, that all financial systems, all financial tools, they're built on trust. And with Facebook as the lead horse around Libra, I think it's fair to say, Facebook has really had a trust deficit based upon a lot of things that have happened to the company and the things they have done. So I think it's going to be hard for Libra to kind of, using that foundation of trust from Facebook, to get a lot of momentum. As you know well, there's a lot of regulatory scrutiny and questions that are still not yet answered. I think the good news is key people like Mark Zuckerberg have said they won't go live until those things are clarified.
Jamie Dimon says, nice idea, but it won't happen. Is it too soon to write it off?
I think it's too soon to write it off, but I also think you obviously seen a lot of the momentum shift. It came out in June with a lot of excitement, enthusiasm. Since that time, you've seen the likes of MasterCard and PayPal and others step away. Although I think a lot of that's because of the regulatory uncertainty. I think Facebook took a pretty aggressive, arguably maybe naive a little bit, that they could just run into this and do this despite a lot of concerns.
That was Ripple CEO Brad Garlinghouse. And coming up, Impossible Foods is cooking up some Impossible Pork for China. We look at a taste for plant-based meat craze in Shanghai. That is next. This is Bloomberg. This is Bloomberg Technology Global Link, where we are now joined by Bloomberg Daybreak Australia to bring you the latest in global tech news. I am Taylor Riggs in San Francisco with Heidi Stroud-Watts in Sydney and Sherry Ann in New York. Let's take a look at the top global tech stories of the day. Sherry?
Taylor, thank you. A key U.S. lawmaker is the latest to sound the alarm over TikTok as a national security threat. Senator Josh Hawley claims the Chinese-owned TikTok could turn over data on Americans if the Chinese government desires. Hawley also called out Apple for storing iCloud data locally for users in mainland China. Chinese payments giants Alipay and WeChat Pay are planning to let foreign visitors use those apps in China for a price. Alipay said it's letting travelers use a prepaid card service provided by the Bank of Shanghai, while WeChat Pay intends to let people more directly connect their existing cards to its apps. The apps owned by Alibaba and Tencent account for 94% of the country's mobile payment market. And Huawei's billionaire founder says there aren't any U.S. buyers for its 5G technology yet. Ren Zhengfei told a panel in Shenzhen, moderated by Bloomberg Television, that, quote, there are no American companies talking to us. The U.S. government accuses Huawei of aiding Beijing in spying and is seeking to ban Huawei from America's 5G networks. Those are the top global tech stories we're watching. Heidi?
Sherry, well, the China International Import Expo is now in its second year. The event is designed to showcase the country's desire to shift its economy towards buying more foreign goods. 63 countries are participating this year. Our very own Selena Wang has been covering it for us. She joins us now from Shanghai. Selena, great to have you. You know, it's interesting from President Xi's opening remarks. He pretty directly criticized the exclusion of Chinese tech companies by foreign players, the likes of the US. I'm wondering what the representation and the presence of tech has been at this year's event.
Heidi, that's right. You heard Xi warn about intellectual blockages, highlighting fears of this tech decoupling. But you did see significant presence from large U.S. tech companies like Microsoft and Qualcomm, which was showing off its collaborations with Chinese partners when it comes to 5G, smart cities. You even saw companies that are blocked in China have a presence there. In fact, I was just at the Facebook and Instagram booth yesterday where they were showing off some of their latest artificial intelligence technologies. Now, I do also want to point out that Samsung had a very large presence there. This is a company that has significantly lost market share to domestic players when it comes to its smartphone market, but they are still investing heavily in China in terms of potentially being in the second phase of their chip-making plant in Xi'an, China. That's according to Xinhua News. So you have a lot of tech companies there despite growing fears of decoupling, and no shortage of U.S. tech companies there as well.
Selena, you spoke with the Impossible Foods CEO, Pat Brown. Take a listen to what he had to say.
We want to enter China as soon as we possibly can. We're talking to potential partners. We're talking to government officials, and we're being very deliberate about it. We want to build an industry, a plant-based meat industry in China that gets its ingredients from Chinese farmers.
Selena, when are we seeing fake meat in China?
Well, I had the opportunity to speak to the CEO of Impossible Foods yesterday, Pat Brown, as you heard there, and actually try some of the fake meat. They were making their first debut to Chinese consumers at this event, and they are working on imminently making a commercial debut. Now, this company has caught the U.S. by storm. They're across thousands of restaurants already. They are in also international markets in Asia, but not China yet. In the U.S., they have partnerships with Burger King and food processing group OSI. Pat Brown says that they're already in talks with partners and regulators in China. This is a top priority for this company, and if they can crack the China market, that is going to be a game changer for this company. And he also gave me new details for the first time on their efforts to create imitation pork. This is a big deal in China because pork is the most popular meat in China, and it's not yet been created in terms of a good substitute for it. It's also dealing with China, this hog shortage because of the African swine flu. I asked Pat Brown about these macro factors, and he says that he hopes Impossible Foods can somewhat help to partially fill the void that's been caused by this epidemic, as well as some of the food security issues that China's government has prioritized.
Thank you to Bloomberg's Selena Wang, Sherry Ann, and Heidi Stroud-Watts. And more to come. This is Bloomberg. On Tuesday, Americans took to the polls in both state and local elections, and it looks like there were no successful attempts to mess with the vote. That is according to the U.S. Department of Justice and a slew of other federal agencies. But that is not a guarantee that next year's election will be free from meddling. In fact, according to U.S. officials, it's expected to be the opposite. To discuss election meddling as part of our electioneering series, we have Alex Halderman. He's a professor of computer science with the University of Michigan. He has successfully hacked voting machines in the past to prove their vulnerabilities. And in New York, it is Harry Hursty. He's a white hat hacker and the founding partner of cybersecurity firm Nordic Innovation Labs. You may remember him from the award-winning HBO documentary Hacking Democracy, where he hacked U.S. voting machines and actually demonstrated that election results could be changed. So thank you both for joining as part of our electioneering series. And we started out this segment talking about how the local elections on Tuesday didn't appear to have been meddled with, but that doesn't mean that it's over or that there is no threat. In both of your cases, and Professor Alex, I will start with you, what is the biggest risk as you look to 2020?
Well, the biggest risk is that much of America's election infrastructure is badly out of date. There are many states that still don't have a paper record of every ballot, and many states that won't check those paper records where they're present. So there's a risk that sophisticated foreign hackers could break in and actually change the way votes are being counted.
Harry, do you agree that that is also the biggest risk?
It's one of the biggest risks, yes. The other part of this puzzle is that the U.S. voting machines generally don't keep a forensic evidence. So if there is a false claim of a foul play, these machines cannot really prove that everything went right. So in case that really requires that in order to have regain the public trust, that the risk limiting audit is conducted to prove that the results are the correct ones.
So Harry, how do we get proof?
The proof really is all about, because all the voting machines we have today and all the voting machines we have in the foreseeable future are something which we can hack. They are literally computers, and that's why everything will be hackable. So the question is not to audit the machines. The machines have to be as good as possible, but really it's all about auditing the results and making certain that the public can trust that the results are the correct ones. So it's all about auditing.
Professor Alex, do you agree that we need to improve our auditing skills to ensure the security of the elections?
Well, that's one of the key components. We have to make sure that state and local governments implement basic cybersecurity, hygiene, and best practices. We have to make sure that there's paper backing every single ballot. And we've got to do audits that are robust enough to give us a really high probability of detecting any outcome-changing fraud.
Alex, you've mentioned paper voting twice now. Give me your thoughts on paper ballots versus electronic voting.
Well, electronic voting, unfortunately, was very popular a decade ago, and we had computers that just maintained every single record of the vote in a digital database. But all of those records, unfortunately, can be changed if a cyber attacker is successful at penetrating the voting machines used in a jurisdiction. With paper, you have a physical record that just can't be changed in a cyber attack. And in this day and age, it should just be common sense that you want to have that kind of physical backup to be safe.
So Harry, talk to me as we look forward and try to make sure that these voting machines are secure. What role does technology play? Do we look at blockchain to help secure, AI, better cybersecurity? What role does technology play in securing those votes?
First of all, U.S. elections are uniquely complex, so U.S. elections cannot be conducted without using technology. However, a lot of technologies which have been proposed are very much unproven and unsuitable for securing election. For example, blockchain. Blockchain is really a solution looking for a problem, and one of the problems is not elections. We have a lot of peer-reviewed documents showing and studies showing why blockchain is fundamentally incompatible with election. The same way all the proposals which comes with online voting, we don't have a technology to do online voting. We don't have technology to do internet voting. elections are a uniquely hard problem because of the requirement of having secret ballot and auditability at the same time. So really we don't have any other technology than paper ballot, and then using technology to process the paper ballots and then audits to make sure that the technology works as it was supposed to work.
Alex, your take on the role of technology. Could you have something like AI or a blockchain, something that's secure and not hackable?
Well, blockchain is really good for certain things, for achieving a public record of past events that everyone can agree on. But really, in voting, well, I like to say that blockchain solves the problem of stolen votes just about as well as Bitcoin solves the problem of stolen money. Like, it doesn't. You can still have Bitcoin stolen if someone breaks into your computer, steals your password, or compromises an exchange. And it's the same when it comes to applying blockchain to voting.
That might be the quote of the day. So quickly here, a question to you both. Alex, I start with you. Facebook and Twitter in the fight on political ads, who is right?
I think Twitter has it right, that the safer thing to do right now is just to make sure that we're keeping political fights and potential disinformation at a distance from social media, especially when those political ads are a potential revenue source for the companies involved.
Harry, political ads, does Twitter have it right over Facebook?
I agree with Alex on that. Really, we don't have a human firewall. We lack a training for the voters and us as humans to have a capability of filter and use a source critic to the advertising we are shown. So at this point of time, keeping it out is the best way.
Thank you to Alex Halderman of the University of Michigan and Harry Hursty of Nordic Innovation Labs. Now, other than hacking, news of the alleged espionage is rocking the tech community. The U.S. government alleges that 2 former Twitter employees helped Saudis spy on users. A Saudi national is also said to be charged in the U.S. criminal case. Twitter has thanked the Department of Justice for the probe, and we will continue to follow this story as it evolves. And still ahead, in an exclusive interview, Microsoft president discusses the company's philosophy and what he thinks are the important issues in the 2020 elections. That is next. This is Bloomberg. An earnings beat for Square is pushing after-hour shares higher. Jack Dorsey's company reported adjusted revenue of about $2 million for the third quarter. That is up 40% from the same quarter last year. The growth indicator comes at a good time. Square shares have fallen about 20% in the last year. Now, Qualcomm gave a stronger than predicted forecast for the first quarter, indicating that smartphone demand may be picking up after a prolonged slump. Qualcomm is now in its 5th year of revenue declines. Investors have been waiting to see whether Qualcomm can parlay its claim of leadership in 5G wireless technology into sales growth. Bloomberg Technology's Ian King joins us now. And Ian, you just got off the earnings call. What was the key takeaway from the call?
Yeah, I mean, the whole conversation was about their outlook for the smartphone market next year, 2020. They're saying it's going to return to growth again. As much as 1.85 billion devices are going to be sold. And more importantly, 5G devices, as many as 225 million are going to be shipped next year, is what they said.
We also know that they're looking at what could be a 5th year of both sales and earnings decline. Is that due to the smartphone market? And if that starts to grow, could we start to see top and bottom line growth for Qualcomm? Yeah,
I mean, they could be back to growth year on year as early as next quarter if they hit some of their targets. But it's been a rough period for them. I mean, it's been this hideous kind of long drawn-out dispute with Apple that took away a big customer. They've also got a dispute with Huawei, which still hasn't been solved. And on top of that, you have people getting bored with their smartphones and not seeing anything exciting about new ones to the point that they did. So what they're saying is that phase of the smartphone market for them is over, and things are going to come back. Just spoke to an analyst who said, well, that's maybe a little bit optimistic. So, but so far, people like what they said.
And you mentioned the settlement with Apple. How much of a tailwind is that for the shares or the fundamentals for the stock?
Yeah, I mean, it means they're getting paid on licensing already. So even though they're not in the iPhone at the moment, They're getting paid a fee because their technology is, right? They already won that one. But it really won't cut in terms of their chip unit until at some point next year, probably this time next year when Apple comes out with its next version of its iPhone, when you'll see actual Qualcomm silicon in iPhones again.
You know, Morgan Stanley analysts coming into this call said the fourth quarter, which is what they reported, looked good, but it was really next quarter, that first quarter fiscal year, that might have been too optimistic. But if the shares are rising, do you get a feeling that maybe they weren't too optimistic? Are investors pretty happy that maybe the first quarter, that next quarter, is right in line?
Well, I think they're getting some credit for having been conservative about the quarter they just reported, and then proved through their own execution that they actually did better. So that buys them credibility when they go out and say things are getting incrementally better again. And obviously people like that. People want, you know, this company to go back to growth.
And finally, just a top shakeup at the top of management. They are naming a new CFO. How big of news is this?
I mean, this guy has been with them a long time. He's been in the chip division, basically the head of the finance for that chip division. On the call, he answered a lot of questions. He was obviously very, very entrenched in the company and understands the business model. They're not getting an outside perspective here. They're getting a very much somebody who knows this company.
Keeping it internal. Bloomberg Technologies' Ian King, thank you for joining. Now, Microsoft President Brad Smith shares his new book and his take on working with the U.S. government. Bloomberg's Tom Giles sat down with him in an exclusive interview on Bloomberg Studio 1.0. Take a listen.
The first thing I would say is we have a philosophy, a set of principles that remains constant. Whenever there is a new team in the White House, we have a new president of the United States. Our philosophy is to partner where we can and stand apart when we should. And we worked together with the Obama White House on many issues, and yet we sued the United States government not once but 4 times over the surveillance and privacy issues that were surfacing in the wake of the Snowden disclosures. We've had the opportunity to work with President Trump and the Trump White House on important initiatives around issues like cybersecurity, and at the same time we have brought a lawsuit together with Princeton University and a Princeton student to address the issues that are facing the Dreamers. We have employees that benefit from the DACA legislation, whose ability to stay in the United States is impacted by the executive order that changed that. But I will say the other thing that we really seek to do, regardless of who is in government in this country or in any other, is to focus on the issues, address the substance, be respectful of people, and not engage in some of the more dramatic name calling that I think can take us backwards rather than move us forward. I think especially as a company, we need to be a force for constructive dialogue and progress. And that is the kind of philosophical tenet around which we just remain steadfast.
We're on the cusp of another election. As you look at the field of candidates for 2020, are there any who are articulating what you believe to be a sensible way forward for the technology industry?
Well, one of the reasons we wrote this book is we, in fact, believe there's an opportunity not just for people who are running for office, but for all of us as citizens to actually think a bit more broadly and deeply about the technology issues of our time. And yeah, I think that there's a lot of room for us to be broader in our perspective. Technology is changing the world, but it is not reaching everyone in this country. Rural communities are being held back by the lack of access to broadband. Many populations, minority populations, people who are less well off, are being held back by the lack of access to technology skills. We all have fundamental interests in the protection of our privacy and security and the like. And so what we would say is we would all benefit from understanding where technology is going and then thinking about what that means for our lives and what we will need from the leaders of our states and this country. And it's really in effort to make these issues more approachable, to also hopefully make them a little more interesting and engaging, that really sort of motivated us to take the time to put this book together.
Is there a candidate who's outlining what you consider to be a sensible view on the right way to regulate technology?
Well, I'm not going to endorse any specific candidate. I will say that in every candidate we see some ideas that we think have real merit, and in every candidate we see an opportunity to learn more and do better. If there's one issue that I'll point to where I would frankly just love to see more attention and more innovation, it is in this issue around rural broadband. We live every day in this country now with an appreciation that there are people in rural communities that feel that the country is not serving their needs. And yet what we too often see, I fear, is candidates who talk about spending 60 or 70 or $80 billion or more to try to bring fiber optic cables to every home. There are better ways, there are cheaper ways, there are faster ways for us to connect everyone in this country. We need to make it a goal. We need to ground ourselves in the data. We need to have a more forward-looking strategy. I hope that we'll see one or more candidates embrace this, because it deserves to be a real mission, we believe, for the United States.
That was Microsoft President Brad Smith. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.